Hey, what's up guys? John here. Florida has the most price reductions by home sellers of any state in America.
A new report found several areas in Florida could see home prices drop over the next year.
Some Florida metro areas could see home prices drop.
There's over 200,000 properties presently listed for sale in just Florida alone, and 1 in 4 is already reducing their prices. For context, there's about 10.2 million housing units in the state. 1 out of 46 of them are listed right now on the market for sale. You can see that home inventory is starting to skyrocket throughout the state. And one of the main key drivers to this is the extremely expensive property insurance, car insurance. Everything is very, very expensive.
Florida's property insurance crisis.
The cost of home insurance is on the rise, and Floridians already pay more than anybody else in the country.
We already pay at least 3 times the national average in premiums to insure our homes.
And what I think is going to happen next is going to change Florida's real estate market forever. I think it's going to be one of the biggest bubbles in the U.S. economy, and that's saying a lot. In this video, I'm going to break it down. I'm going to show you the facts and show you exactly what's going on to help you and position you for what I believe is going to be a massive wealth building opportunity over the next couple of years. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's happening in the U.S. economy. And if you'd like to fix your credit to position yourself for this massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Take a look at this. So home inventory right now is January 2024 is all the way at basically June 2020 levels. So you can see very, very closely that probably over the next couple months we're going to pass the 2020 highs and go back to 2018, 2019 levels, which is a very big change for the mania that fueled the last couple of years. Now, when you look at what's happening with Florida insurance, it's unreal. Florida and Texas, two of the most sought out destinations for Americans, fed up with high taxes and strict policies, are now facing their own exodus over soaring cost of living in both states. Skyrocketing insurance premiums, rising property taxes, and surging real estate prices have prompted some residents in Florida and Texas to throw in their hands in despair and leave for cheaper locales Midwest. Last year alone, more than 91,000 New Yorkers relocated to Florida. Well, over 31,000 moved to Texas. Now look at where premiums are. This year, homeowners in the Sunshine State pay an average of $6,000 a year for home insurance, $500 every single month for insurance alone. Now this is crazy. Like, it's absolutely insane. So if you were to buy the average price home in Florida, which they say is $388,000, if you're buying a property for $388,000, you're nowhere near the water. You're probably, east of 95 or west of 95, miles and miles out. Because anything on the east side of 95 is probably somewhere in the 400,000 to 800,000 range at least, right? So at $388,000, at today's mortgage rates of 7.5%, which is, if you have good credit, you're, somewhere in that range, 7.7 if you have above average credit score. The average credit score in America is a 698. So if you have that credit score, you're probably somewhere in the mid 7s. If you have the average credit score in America, you're at 805. So just to be conservative, 7.5%, 30-year fixed. With the average down payment for the first-time buyer, 6%. With the normal property insurance rate now with $6,000, you're looking at $3,945 for a property not anywhere, most likely desirable, right? Not in a desirable area. Doesn't include HOA, doesn't include anything like that. So if you add HOA, you start adding these things in, you're looking at $4,300, $4,500, maybe $5,000 after upkeep and expenses. That's extremely expensive for the average. Now, when you look at kind of how fast this is moving, it's shocking. In certain areas, you're seeing, insurance go up to here. Mike Durham owns a 3-bedroom holiday home in Melbourne Beach with his family. Told Newsweek that the house now costs $11,000 per year to insure. We will be selling $11,000 a year just for the insurance. Scott said his insurance doubled in 2023, going from $2,760 to $5,200. He had to change insurance companies and drop his sinkhole coverage to get it to a more realistic or more manageable $3,200. He said He'd never had a claim on his property in the last 19 years, but his insurer dropped him on short notice because his roof was over 20 years old, and they believed he hadn't done enough maintenance, a claim he denies. This lady, Debbie, a Florida resident, 64, told Newsweek the exorbitant prices she's forced to pay are making her consider moving to Georgia. I have a neighbor right now, nice lady, older lady, maybe 70 years old, retirement age, and she is forced to sell right now because of an assessment on our building. The insurance carrier said, look, it's going to cost about $2 million to bring everything up to code, and it's going to cost each unit, tens of thousands of dollars. And so she can't afford it. She's relocating. Her, along many other people, Florida's a state of retirees. You're going to start seeing so many more people pick up, going from, this 24% price reduction, probably 30, 35% coming very, very soon. Florida condo prices drop as insurance crisis deepens. This came out 4 or 5 days ago. Sales of condos in Florida have plummeted in January, even as prices fall amid high cost of home insurance, according to the real estate platform Redfin. Owners are looking to offload these properties as evidenced by a jump in listings. But the homes are proving difficult to sell with insurance costs skyrocketing in Florida, making buyers more reluctant to invest in condos in the Sunshine State. Some of the major metros are seeing a plunge in the sale of homes. Jacksonville, for example, saw the median sales price fall 6.5% compared to a year ago, as the number of sales took a nosedive by more than 27%. Miami, meanwhile, saw the median sale price year over year slide in January by 2.5%, amid sales decline of nearly 9%. Some parts of the state, like Cape Coral and Northern Port, are statistically doing well as they started at a low base after being hit by Hurricane Ian, Redfin pointed out. Now, when you look at what this would cost, be a homeowner compared to being a renter inside of the state, you can see where all the trends are going to be going. You could rent, according to Apartment List, currently the median rental price for a one bedroom is $1,325 compared to buying the average home, which was, $3,945. So you're going to have to spend 2.5, basically 2 times the cost to rent to be able to buy. Who's going to do it? If you're in, Florida City, you're looking at $955, and if you're in, nicer areas, $1,468, $1,760, you're looking somewhere between probably $1,300 and $1,800 to be in Florida as a renter for a one bedroom compared to buying. And now what's going to likely happen is we're going to see rents continue to fall. That's what's going to happen. You have 1.6 million properties that are completely paid off. As insurance premiums start to pick up more and more and more, some of these people are going to, opt to rent out these properties, people that are retirees that own second homes, to try to bring in some extra income to offset some cost. You're going to see a lot of, distressed sellers that can't sell their properties trying to rent them for the short term. We're going to see a lot of compression, I believe, on rents. And that's saying a lot because the state's already seen a 4.84% decrease, and Miami has experienced a 9.72% price drop in rental prices, almost 10%. Now, what's really shocking is during 2020 and 2021, during the mania of real estate with record low interest rates, you saw so many people leaving LA, San Fran, New York, selling their buildings with the eviction moratoriums and trying to 1031 exchange into properties in Miami where rents were growing at 15, 20, 30% a year during that period. It was an absolute mania. And when you're seeing rents start to, give back those gains, and a lot of these property owners are now dealing with increased insurance, increased taxes, higher vacancies, higher evictions, it's going to be a very, very big problem, considering they bought these properties for a 4.4% return. So how can they offset mortgage rates going from, 3% to 7 or 7.5 or maybe even 8%? How are they going to be able to do that as insurance rates rise and rents soften? They're not. We're going to see a lot of properties going back to the bank. The same thing is going to be applying to people that are buying Airbnbs, thinking that this was going to be the mania, this was going to be the mecca. You're going to see a lot more Airbnb inventory as home sellers try to do what they can do to try to hold on to their properties if they don't have the equity to sell. Right? It's going to be interesting. You're going to see more of this as well. Denied a mortgage to buy a Florida condo, a secret quasi-government blacklist may be why. And they say that some people trying to buy a condominium in South Florida but getting mysteriously rejected for a mortgage could be in for a jolt. The reason they can't get a loan, maybe that their condo is on a secret blacklist. News media reports in the black leak to a pair of law firms in New England and Fort Lauderdale have now confirmed what some in the condo industry suspected, that Fannie Mae, one of 2 federally chartered companies that help determine who qualifies for a home mortgage, has for at least 2 years maintained a confidential blacklist of condo buildings, including hundreds in Florida, that it won't back for loans, typically because of maintenance and financial issues. Now, who else has mentioned this? Glenn Kelman, the CEO of Redfin. And what he's been saying is this, that it's going to be basically impossible to get insurance for these properties, and it's going to get much, much harder to, get a mortgage. He said people buying in Florida, flood-prone coast, will likely have a hard time selling them in the future, right? He said that about a year ago, right? But then he said this that was very interesting. In 2021, September 3rd, home buyers aren't taking this seriously. And what he said was that I think the idea of climate is going to be factored into how people think about housing. It hasn't happened yet. The only people who have figured it out are the actuaries, the people who have to calculate the cost of insuring these properties. Increasingly, it's going to get harder to get insurance. It's going to get harder to get a loan for these properties because the lender is going to see the writing on the wall that it's collateral. Now, collateral risk. Now you look at this. If you're underwriting a mortgage and you are underwriting it based on the person's debt-to-income ratio, that home buyer, but their debt-to-income ratio is going to change because the expenses on that loan, on that property, are going to continue to rise over time. What are you going to do as a lender? You're going to be more conservative. You're going to realize that it's only a matter of time until this borrower can afford it if they're buying it at 30, 40% debt-to-income ratio, right? So what's going to happen? More lenders are going to be pulling back, and more sellers are going to get priced out as insurance, and taxes continue to rise. So I believe we're walking into a really interesting situation here in the Florida housing market. I think it's going to be one of the biggest bubbles in America, and I think we're going to see a lot of foreclosures. I think it's going to be very reminiscent of 2008. What do you think about this entire situation? Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself for this massive wealth transfer we're likely going to see in residential real estate, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Tuesday. Catch you next video.